Everyone, Paul here. Today I'm going to go over a strategy, and I think I might have talked about this on my channel before, but it's basically two steps to it. There's some moving averages, and we'll be using the differences of two moving averages. And it's a good strategy to help kind of find the bottom, and it also helps with the top when to sell and take money off the top. So we're going to be looking at this strategy for crypto, and we're going to use that as an example because Bitcoin has recently just come down, and it'll be a good example. You can use this for the longer time frame you go, the better. But I'm going to show you how to set it up. There's 3 moving averages you need, as well as the differences of 2 moving averages. So I'll show you how to set it up, and then basically we'll go back in a longer time frame, and we'll look at key moments to actually get in for your trade on where you can actually, you can either enter from the bottom and sell at the top, or you can go from the top and write it down. So anyway, I'll show you how to set it up. Okay, so to set this up, you're going to need to go to your settings. You could do this with 2 indicators here. So you could do this on a free account if you want. So you basically got to go to your indicators. You want to go to 3 smooth moving averages. And in your settings, you want to put it at, make sure they're bright colors here. You want to go to 9, 21, and 50. Now the 50, you want to make a bright color, and you want to make it more thick, at least I do, because I'll go into it, but the 50 is basically there to show you what the overall direction is. And so basically, once you have that set up, you'll have your 50 right here, and then you got your 9 and your 21 right here. So the next one you're going to need is you have to go to your difference of 2 moving averages. And what you basically want to do is you want to change your settings to 13 and 24. So you go here and you just change your settings to 13, 24, and it'll look exactly like it does right there. So basically, there's 2 ways to actually look for signals. Basically, the first half of it, you focus on, the first half you could focus on whatever time frame you want, because you basically be using the 9, 21, and the 50. So basically what you do is you want to enter your trade when there's a cross, and this could happen at any time frame you want. So the further out you go in the time frame, the longer you're going to have to wait. So like here on the day, when we look at Bitcoin on the day, the last time all of them crossed was right about here. So if you came in right here, you could have caught this entire run up, and depending on, you could have rode it all the way up to where it's crossing now. So if you looked at this on the day, you could have bought it right here, and you could have rode it all the way to the top, and it might be crossing back down. So you could have rode that entire run out from the first moment that it crossed right there to where it possibly might cross back down. So that's the first way to do it. Now you can do this now following the 9. The 50 is meant there to show you what the overall direction is. So you can also scalp it by just looking at the 9 and the 21. So if you want to do it on a smaller time frame, let's say the hour, you'd want to do the same thing. You'd want to wait for the 9, the 21, and the 50 all to cross. The longer you go in the time frame, the better the results are potentially going to be. Like you see the start of the downtrend right about here. Could have rode this out. So anyway, you can follow the cross with the 9, the 21, and the 50 for the best results. I would not do this on a shorter time frame. If you do it on the minute, you might get some brief results, but you run the risk of going into consolidation zones. So I would stick to anywhere from the hour up to the day. But But as well, now I talked about the moving average, I kind of want to go over how to use the difference of two moving averages. Basically, when you want to enter your trade, you want to look at the difference of two moving averages. And since we had a dump down, you want to make sure you can enter your trade. Now, if we look at the previous times, now if we look at our 9, 21, and 50, we will see that right now it's a uptrend. So you could focus on every moment that on the difference of two moving averages. The moment the difference of two moving averages start to cross up. So we see the 921 and the 50 is in an uptrend right here. So you could have got in at this point. You could come anywhere at this point. So basically, when you want to look for a reversal of it going up, basically right now it could come down a little bit more, but when it starts going into dark red and the bars start getting smaller, that is a good indication that it's going to start reversing going up. So if you want to look for pullbacks reversed to the upside, you want to look for it to stop being light red here. You want it to go to a dark red, and you want the bars to get smaller. That is a big indication that it's going to start to go back up. You also want to look for when it starts to go above the zero line. Now, if you do this on a longer time frame, the better results you're going to have. So for when Bitcoin's going to start going back up, we want to wait for it to either go to a dark red, or we want to wait for it to come above this zero line right here. So if you want to do this on the opposite side of things, now you want to do this when it turns into a dark green and it goes below the zero line. But this is going against the trend, so I would try to confirm that the trend is going down, because personally I wouldn't want to go against the trend. I always want to go with the trend. But this is what you want to do in an opposite on a pullback. When you see the red go below the zero line, but this is going against the trend, because if you look at the 9, 21, and 50, you'll know that you are still in an uptrend. So use the 9, 21, and 50 to confirm what direction you're going and go on that direction. And then use your EMA difference here to get a good signal here, because what this might do is it might go down for a couple more days, and you might see this start turning to dark red, and then we might start going back up. So when this starts going back up here, this is a good signal to get in. Let's look at a couple moments. So we see this go right here. We were in an uptrend with the 9, 21, and 50. If you got in right here, you would have had some profit. And if you got right here, you would have been in some massive profit. So you could have come in here and you rode this entire thing out, or you could come in here. You could have come in here. Could have come in here, and you could have come in there. So if you're looking for an uptrend, you got to wait for it to come up on the zero line. If you're looking for a downtrend, you got to wait for it to go below the zero line. But you also have to be confirmed with that with your 9, 21, and 50. So anyway, this is a good way to do it. This is recommended for a longer time frame. I don't recommend doing this on a smaller time frame, because with this strategy alone, you'll enter into more sideways consolidation areas. So if you focus on doing this on a longer time frame, you should be getting better results. So this strategy works. It works better on the longer time frame. I like to focus on looking at this on the day, but if you look at this on the day chart, you're going to have to wait a while, but it'll give you the best signal. If you do look for this on the day, if you're looking for a moment for it to, what we had recently is everything came down. So you want to look for a good point to get in. You want to wait for the difference of two moving averages to start going into, from those little red bars all the way to go into the little darker red, and then it getting closer to hitting the zero line. And if you want to do with a downtrend, you first have to confirm that it's going into a downtrend. The overall trend has to go down, and then you have to confirm it. Do the opposite on the upside. You want to look for the green to start thinning out and turn into a dark green. and then crossing down on the 0 line. Works the best on a longer time frame. The lowest I would do with this strategy would be the hour. Anything other than that, you might hit up some sideways movement and things like that. But other than that, it works really well. The only disadvantage to this strategy is you do have to wait a while to find these signals. But anyway, if you guys like the strategy, I am going to be talking about this with another couple other assets because it works really well on a lot of assets. So anyway, if you guys like this video, hit the like button, hit the subscribe button. I'll see you guys in future videos.